The bull run for the Singapore property market seems to be over. Private home prices are now increasing at a slower pace. HDB resale price increase are slowing down too. At the same time, the number of home sales have now fallen to a 15-year low. What does all this mean for the Singapore property market? Can it still continue to go up some more, or will it start going back down? In this video, I'll be explaining what's going on in the Singapore property market now and what might happen to property prices in the next few years. Also, do join my Telegram chat group to discuss or ask any questions that you may have. Alright, let's jump right in. To first understand why home price growth is now slowing down, we have to first understand what caused this bull market to happen in the first place. All of it can be summed up to just 3 words: supply and demand. The bull market for private properties actually started way back in 2017 when there was an en bloc fever going on. So what happened was that around 2017, the number of unsold private properties were going down and property developers were starting to run out of homes to sell. So they needed to replenish their inventory. Hence, they started unblocking a whole bunch of private properties. From 2017 to 2018, we saw more than 50 properties being unblocked, with the total value amounting to more than $19 billion being paid to property owners. And guess what happens after the owners have sold their properties and got rich? They will need to look for the next place to live, right? So that money flowed right back into the property market. As a result, private home prices actually stopped falling and started going back up instead. Then fast forward to 2020, there was the whole pandemic lockdown, which resulted in manpower shortages and supply chain disruptions, which caused huge delays to BTO projects. Waiting times, which usually took under 4 years, now went up to as high as 6 to 7 years. So what happens if you are a new couple who urgently needs a house to head-show? Yup, you will go look for resale HDBs instead. As a result, HDB prices started going up quickly, and we even started seeing more and more million-dollar HDBs being sold every year. And while there was a record number of HDB flats reaching MOP starting 2020, meaning there was new supplies coming into the resale market, prices not only did not dip, but in contrast, it helped to stimulate demand, which drove up home prices even further. But before we talk about what happens next, here's a word from today's sponsor, Ohmyhome. Ohmyhome has a useful AI tool called Ohmyhome. With Ohmyhome, you will have access to real-time information of your home valuation. Not just that, you will also be able to easily see how much your neighbors have sold and rented their homes for, how many homes near you have been sold, and what's the lowest selling price and highest selling price. If you are thinking of upgrading to a new home or are just curious, you can check out the Calculator tab, where you can find out how much cash proceeds you will receive when you sell your home, how much you can afford for your next dream home, as well as calculate the monthly mortgage payment that you can expect. Besides that, Ohmyhome has just launched a new feature called Mesh. This will help homeowners know about their recent potential buyer matches. With this, you will be able to know the demand for your property even before you put out a listing. This will not only help you sell more efficiently, but also sell faster at a higher market price. Or if you are looking to sell your home soon, you can check out the Journey tab, where you are able to engage Ohmyhome for your next home journey. Ohmyhome takes care of the entire process for you, including the valuation report, professional photography, advertising, documentation, and due closing. Ohmyhome's commission fee starts at just 1%, which is half the market rate of 2%. On top of that, they are confident that they can sell your home within 3 months at an optimal price. Otherwise, they will just waive off the fees. Ohmyhome also offers other solutions such as buying, renting, and even renovating. Oh yeah, they are also pretty highly rated with 5 stars on Facebook and 4.9 stars on Google. Ohmyhome is totally free to use, and because I have a deal with them, if you sign up using my link down below and connect your home to it, you will get a free $5 NTUC voucher. And if you are interested to find out more, you can use this link where you'll be able to link up with them via WhatsApp. With that being said, let's get back to the video. So, in order to cool down the property market, the government introduced a whole bunch of cooling measures, such as a 15-month wait-out period for those who are planning to downgrade from a private property to a HDB, increase in buyer stamp duty for higher value properties, new HDB classifications, which includes a 10-year MOP period and subsidy clawbacks after you have sold your home, increase in additional buyer stamp duties for second property and onwards, as well as drastically increasing the ABSD for foreigners. And finally, the crazy bull run started to slow down. Oh yeah, the increased interest rates as well as more HDB projects and private properties being completed in 2023 help with the situation too. So then, where will the property market go from here? To get an idea, we can again look at both the number of supplies and the demand. Let's start with the HDB resale market first. Here, you can clearly see that the number of transactions have actually peaked in 2021 and have been slowly trending down. Most of the people who wanted to buy would have already made their purchase. Though, interestingly, you will notice that despite the volume going down, prices are still going up. Why like that? An article by SG Luxury Condo explains this. Basically, there is still more demand than there is supply. So on one hand, you will have a group of buyers who can't wait and need a place immediately. They will have no choice but to purchase at a much higher price. This causes property prices to go up, while the rest of the buyers who are unwilling to pay a high price, they will just have a wait and see approach, and this causes transaction volume to go down. Also, what's helping with the situation is HDB's plan of launching 100,000 BTO flats from 2021 to 2025. So that's an average of 20,000 flats per year. This is a huge surplus as compared to the pre-pandemic years, where we only saw 16,500 flats being launched annually. At the same time, BTO waiting times have now come back down to below 3 years. Okay lah, 3 years is still a long time, but it's still much better than having to wait for 7 years, yeah. So, because there's a lower demand and higher supply now, we can expect HDB price growth to continue cooling down. As for private properties, there will actually be a drop in the number of completed units going forward. So, bull run again? Not quite, because in 2023, the government has suddenly announced that there will be 8 new government land sales, which according to Step Homes is enough to build 5,000 over new homes. This is the biggest land sale that we have seen in over around a decade. Then, if you look at the average condo transaction volume, ever since the government introduced the ABSD hike in April 2023, the transaction volume in condo prices have started to decline. Similarly, despite the transaction volume going down, property prices have actually gone up instead. Though, this is only when we are looking at the entire condo market, which includes the RCR and OCR. That's because condos in these regions are usually bought for homeowners' own stay, which means that owners here aren't that affected by the higher ABSD cooling measures. But if you look at just the core central region, where properties are usually purchased for investment, we will actually see a decline in prices, which means the higher ABSDs have been doing its job well of cooling the market. As to where private property prices could go this year, different analysts will have different opinions. An analyst from Mogul.sg feel that the residential property index could continue to rise 6 to 8% in 2024, as long as the Singapore economy, employment and household incomes continue to grow. Meanwhile, RHB expects price growth to be at 0% to 2% in 2024, with a weaker first half. Morgan Stanley, on the other hand, is a little bearish and feels that private home prices will decline by 3% in 2024 and the downturn may last for as long as 2 years. So predictions are all over the place. Whichever the case, we can all agree that the property market has now cooled down a little. But will property prices crash? I highly doubt so. If we check the historical property price index, crashes are usually caused by 2 things, with the first being big recessions, which occurred during the 2000 dot-com bubble and 2008 financial crisis. Then, what about the drop in 2013? This was caused by the government introducing a whopping 10 cooling measures, which is aimed at preventing people from over-leveraging. So unless we see these things happen again, chances are we likely won't see another big crash in the near future. Anyway, that's all for this video. Hopefully you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.